welcome to this week course. This week course is everything you need to know about advanced market structure. They can know how the market moves from multiple time frame perspective. So as you get into this video, make sure you have your notes around or you have your Notion tab open so that you can journal as much as possible as you go through the video. Alright, so this video is about basic market structure, and the market is always in either of these phases. Okay, and there are three in number. The first one is the bullish structure, the second one is the bearish structure, and the third one is the range or consolidation. So I'm going to explain each of these phases. So the first one is the bullish structure. How does the bullish structure look like? So welcome back to another video, and this video is going to be about basic market structure. So when we say structure, it's just like saying the skeletal frame of the market, how the market is on a default. So there are three forms you'd see these markets. Whenever you come on your chart, it's always going to be in either of these forms. The first form is bullish structure, the second form is bearish structure, and the third form is range or consolidation. So a bullish structure is basically the market trending to the upside. When the market is moving up, that's basically what we see as a bullish structure. Okay, no complications or make it complicated. That's it. Now if you look at what I've been drawn here, you see, when you look at what I've been drawing here, you see low, you see high, you see higher low, you see higher high, you see higher low, you see higher high. So what this means is that there is a way you can understand when what the market is doing, because when you're in the market, you'll be confused because the market is going zigzag. It's shifting from one structure to the other. So one way whereby you can understand what it's doing at every single time is by looking at the structure based on highs and lows. So when you see the market make a high and make a low, and it goes further to make a higher high, higher than the previous high, and then it creates a higher low, higher than the previous low, and it continues like that, creating new higher highs than previous highs and creating new higher lows, which you can see here, then it means that the market is progressively going up. Market is going up, and when the market is going up, we know that as a bullish trend. We also know that it's increasing in value. That particular currency pair is increasing in value. Okay, buyers are in charge. So the market is when in trading, bulls, buys, uptrend are all synonymous. Okay, they all mean almost the same thing. Meaning, when you see the market aggressively going up, it means people are buying. The big boys, the hedge funds, are buying. And when you see people talk about bullish, the market is bullish, it's going up, it's bullish, it means it's in an uptrend. So let's go to the next structure. All right, so what we have here is a downtrend. So the second phase, you can see the market is in a downtrend. So a downtrend is when the market is going down aggressively. And when it's going down aggressively, even if it's not aggressively, but when the end result of how it has been performing in a certain time is a decline, okay, a downward movement, that means the market is bearish. Okay, the word bearish comes into play now. Okay, so one way to identify a bearish market is by taking a good look at a high in the market and a low. Okay, when you see that high and low and you look towards the right even more, you find out that there is a lower high lower than that high, and there is a lower low lower than that low. Okay, and there is a lower high lower than this previous lower high. So we just keep having lower highs and lower lows as we progress to the right hand side. And what happens is, this is a mark that, okay, the market is bearish. So right here we have a range. Okay, so What do we mean by a range? This is where the market is neither going up nor coming down. In this case, we are stuck going up, down, up, down, up, down in a confinement. That's called range. You can call it consolidation also. So we'll go on to see chart examples about these market structures so I can see how it looks like. But before we go into chart examples, I would show you another way to look at higher highs and higher lows with a more realistic style that can make you identify them easily. So I want you to look at this. Don't pay attention to what you see on the left. Okay, pay attention to what you see on the right. Now, what did you see? You can see that the market is trending to the upside. And do you know how you were able to know that? It's because you found out that we have a high here, then we have a high higher than this high, and then progressively retraced and then started pulling up again. And when it started pulling up, this low is higher than this low that has ever been created. So all the lows are getting higher than each other. So we had this one first, we had this one first, we had this one. All the highs are getting higher than each other. We have this, we have this, we have this high, we have this low, high, low, high, low. All of them are just getting higher than each other. Your eyes saw this in a summary, and that was how you knew it's an uptrend. That was what your eyes saw. Had it been we having highs and lows, that was not actually going up, it was just going back and forth, you wouldn't say it's an uptrend. So it's the progressive highs and lows, higher highs and higher lows that kept forming that made you know it was an uptrend from here till there. All right, so we have another example here, and this is a downtrend. As you can see, the market is from here right down to here. Okay, so why was it able for you to see? Why were you able to see that? Is because we be making highs, low, high, sorry, low, high, low, high, and all the lows and highs are lower than each other. So we had this high, and this high is lower than this high. And that's why this is a lower high. And we had this low, and this low is lower than this low. And that's why it's a lower low. So in summary, we're having lower highs and lower lows. As we keep going down, lower highs, lower lows, and all that. Then we have this low as a very low. We have this high lower than all of the highs here. And then we kept going. That's exactly how you knew this is a downtrend market. So there's another way you can know this is an uptrend actually. And for an uptrend to be verified, for us to see that it is a real uptrend, then we need to see highs being broken. So for this high, we marked this. This shows that this is a high, this line here, and then you can see the market break it. So that's why it's called breakout structure. So the market broke it to form another high, and we will form another high. We draw another line there to indicate that there's a new high, and the market will what break it to form a new high. And when you find out this happening in the market, that's a sign. Again, that's a second sign that this is what a bullish market, and that's the use of breakout structure to actually know, because the market does not go up for forever, it goes down sometimes. So when it's going up, we use this to actually know. When it's going down, we use something else to know. So the help of this breakout structure is for us to spot when it's changing, because as we mark these highs, all the lows that led to these highs also will be marked. This low led to this high, this low led to this high. So if any low gets broken in process, what happens is that we have changed from bullish to bearish. We'll talk about that as we proceed. Let's go to the downtrend example of this. Right, so we have the downtrend version of this. Okay, as you can see in this, we are not trying to mark breakout structure lines on the highs. We're trying to mark them on the lows. So as you can see, we have it here on the low. These lines indicate the lows. Now what you need to know is that breakout structure, or a bearish trend rather, has its concentration on the lows. Okay, what's the most important thing in a bearish trend is the lows. Okay, the lows. And what's the most important thing in a bullish trend is the highs. So in as much as the most important thing here is the lows, this is where we're going to have our BOS drawn. a low marked, price broke the low. We are seeing signs that the market is bearish and created a new low, and then later price still broke that low again. Okay, this is an extreme sign that the market is bearish, and that's the use of drawing these lines. So when you see the market and you don't know what trend is this, you draw your first highs and lows. When you find out that as you're reading it towards the right, you're seeing that more lows were broken to the downside, then it's a sign that it's a bearish market. All right, so we have an example of an uptrend here. So as you can see, what I said, we saw this same uptrend, and you can see that we have high, low, high, low, and you see we kept creating highs and kept breaking old highs. These old highs got broken, high got broken. These lines are my break of structure lines, and the market keeps breaking every single one. As you can see, keep going higher. That's how I knew this is a downtrend, and this is the best way to find out a market structure. The other way is gonna get you confused when the market is getting complex. Yep, but this is the best way to actually get that. Let's see a bearish example. All right, so this is the bearish trend, and as you can see, we have all the lows drawn. Like I said, the lows are the most important part of a bearish market. As you can see, all the lows are drawn out, drawn out, drawn out, drawn out. You can see that, right? Now, this is an example of what a bearish trend, because all the lows were broken. See, a low here, it gets broken, a low here, it gets broken, a low here, it gets broken, a low gets broken, and that's it. And that is exactly how it should look like. So now we're gonna go and do something practical. We're gonna draw a low in live markets. Okay, so let's get to live market and look for a structure different from this. All right, so we're gonna mark this. This is AUDJPY on the daily time frame. So this is how we mark structure. So you're gonna start with any visible structure you can see, okay? And if you any visible one at all. All right, so we're gonna do it together. So if you want to do something like this, you want to make sure that you're starting from any visible structure you can see. So I'll just start with this. Okay, I'll just start with this. So I want to mark the very tiny structure in this. So we have this high here. So what trend is prevalent? As you can see, the market is bearish. We had this low, we had this high, as you can see. So what's going on? We had low, high, lower low, because we broke through this low. As you can see, we are breaking through these lows again. So let's take off this. You have high, you have low, you have low, you have low. Now if you can see, we started going up from here. So let's focus on just marking on the up on the all right, so let's mark this the way we should. Okay, let's mark it the way we should. So this is an uptrend, and we're just going to focus on the uptrend. And to focus on the uptrend, you see us marking stuff like this. You see me? This is a tool I'm using, trend line. If you check the family of tools, you see a lot. I'm making use of trend lines. Okay, so we have this one. Keep marking all the highs as we break highs. See, we are breaking highs. Just keep marking. You know, these are the lows that cause the breaking of this high, so marking them too is also nice. Okay, marking them too is also nice. This low led to the breaking of this high. This low also led to the breaking of this high, and here we have this low too, and here we have this low too doing the same thing. We just, you know, breaking the highs. This low led to the breaking of this one. This low led to the breaking of this one. So it's an uptrend, and emphasis are on highs, like I told you. But then drawing the lows that led to these highs is optional. You can draw it, you can leave it alone. but it's necessary sometimes, because as you proceed with the course, you will learn what we call change of character, and then you will know why the lows are essential to prove that a character has just changed. But for now, drawing an uptrend, you can keep it simple, but adding the lows that took out the highs can make it even more perfect. All right, so what we have here is bullish to bearish chalk. And bullish to bearish chalk, first of all, chalk is change of character. Okay, this is an acronym for change of character. So when we say bullish to bearish chalk, it simply means when the market was bullish before and then it changed bearish. There is always that low, that line that signifies that things have changed. Because if you look at it from start, we have low, we had high, then we had low, we had high, we are creating higher highs and higher lows. Okay, then when we got to this point, we have our normal high low here, we have our high here. The price failed to retrace, to stop here and continue higher. So what happens is that instead it broke an old low. Immediately that happens, it is called chalk, change of character, meaning the market has changed character from being a bullish market to a bearish market. And that's exactly that line that shows that things have changed is what is colored red. All right, so what we have right here is bearish to bullish chalk. Now this is the same thing as what I explained before, but this is the opposite or the inverse. So the market is bearish. Initially we're creating lower lows, so we're coming down, and then all of a sudden we failed to stop here and go lower as usual. Instead we went and took out the old high. That high, I changed it to what? Red. It's a sign that we have crossed the boundary. We were bearish before, now we are now bullish. Now in the real life market, the market switches from bearish to bullish, bullish to bearish, back to back. It doesn't even have to waste time. It could shift. It could shift bullish here, and then just do one swing, this swing, and then shift bearish again. It happens. So you're gonna be seeing a lot of that in the real life market. So as you can see this right here, you can see that the market was bullish before and it changed bearish. This is the overview. This is the big picture, how you can see it first, like clearly. Okay, that it was going up, now it's going down. So the other way to see it and to make it more detailed in your chart, to spot the exact point where things started changing, is by drawing your breaker structures on all these lines, on all these highs and lows. By drawing your breaker structure, your highs and lows, you'll be able to see when things changed, and this is exactly what I mean. All right, so you can take a look at the same chart, but I've been able to annotate it right now. So you can see the market was bearish, that's why we had lows, lows, breaking lows, breaking lows. All of this is a bearish trend, and then price refused to retrace here and come down as usual. What happened? It's a price took out the high that led to this low. That's where you have the red line, change of character. Okay, so it means we are bullish now, so we have to operate in creating new highs and new highs as we do. So this is a new high, low, high, low, high, low, high. Instead of a retracement and continuation, we broke this low that led to the high, and that's where our chart is red. Now we are bearish for a while. Now we sat bearish for a while, low, high. And in as much as price has not broken here or broken here, as at all this time we don't have anything to mark. But then price went ahead and broke here. So it means while we were bearish before, we flip bullish back real quick, and then we'll shift bearish back again. Okay, so here is supposed to be even a red line, but I think I forgot to mark that. And then we'll flip bullish again here, sorry, bearish again here. So as you can see, red line. So we are bearish, highs, lows, lows, highs, lows, highs, lows, highs. So it continues bearish till down. Now you should have a vivid picture about how this works. Okay, so in real life chart, you can see we have been bearish for a long time, breaking lows, breaking lows, breaking lows, breaking lows. A clear change of character is exactly at this point. So this high in particular led to this low. Okay, Or if I want to be more detailed, let's zoom in so we can be very, very detailed, right? Let's zoom. So let's zoom in. So we have these. Okay. So low, we retraced. We took out this low to have this. We retraced and we had this. So this becomes the high that led price all the way to breaking this new low. Okay. To now have this low. Oh, sorry, wrong two. To now have this low. So what happens is this high led to this low. Sorry, this is leading to this low, and then we retrace. So it means it's this high specifically that pushed price at this low, and that particular high is supposed to be protected. Price is not supposed to run it. If we are going to continue going lower, it's supposed to be left alone. We are just supposed to retrace here a bit and keep dropping. But guess what? Price went above it and closed above. So it means we have changed character to bullish. So on market red, I'll make it tick so it can be a bit more significant than it is right now. You see that we have flipped bullish, and what we continued bullish, because we're making higher highs even more. So we're making higher highs even more, and we did new high here. Very good. We made a high, we retraced, then we use this low to create this new high. We retraced to make this one. This low led to this new high. Should you see that, right? We have that one as a high, and we had this one. Okay, this low taking this to this, and here we flipped bearish. We have this low led to this high. We are supposed to retrace a bit and continue higher. Okay, we're supposed to retrace like this and continue higher to continue what we're doing. But guess what? That didn't happen. So it's a price took out this low. So what that means is this is a change of character, a red change of character. And all we can do is make it take out for us to be what? So we change the word bearish. Do you see that, right? Did we continue bearish? Yes. We continued making bearish lows, right? Right there, bearish. Right there, bearish. And we had this as a change of character. Now if you're very observant, you should know what I'm talking about right now. So did you see we did this low, this high, broke this low and led to this? Instead of us to retrace a bit and continue lower, instead we took out this high. That's a change of character right there. I think with this you can understand a big picture about how change of character works and how simple it is. All right, now we're going to be talking about verified highs, strong lows. And when I say verified high, strong lows, now this is the characteristic of a true uptrend. Now we talked about the BOS to identify uptrend. That's cool. Now when it comes to identifying the trend in a particular time frame, this analysis is needed because the market is just everywhere. Sometimes it's making smaller pullbacks, sometimes it's making huge pullbacks, and this is because whenever you're viewing the charts, you're viewing it from many time frames perspective combined. So now I'm gonna teach you how to read the market or read structure clearly from one time frame perspective. So if you're asked to go to the 4 hours and map out the bullish structure on 4 hours, there are some highs and lows you need to ignore, and there's some highs and lows you need to mark. And this is how you learn it. Now, for every bullish trend, this principle is key: verified highs and strong lows. So what does that mean? It means every of these highs you see need to be verified for this trend to be trusted. And we hear verified, it means on the lower time frame, a chalk has to happen around there. Okay, and what about the lows? The lows become strong lows whenever this low pushes price all the way back up to take out this high. That is how it works. Okay, that's how it works. So this whole structure you see here, low high, higher low, higher high, that flipped bearish,
has to happen around this area. Now, for instance, if you're looking at this time frame and it's a 4-hour time frame, for instance, this information is needed on the 15th. Inside the highs of the 4-hour structures marked, they have to be what, 15 minutes chokes. That's just how it is. And then for the lows, every low that successfully pushed price to take out a verified high is called a strong low. And any high that is not qualified to be a verified high that did not cause this, whatever low pushed price to break that kind of high is not going to be a strong low. Neither is that high going to be a verified high. That's exactly how it is. So it means if you see an uptrend like this, each of these areas are what, verified already, and that's when you can trust it. And these lows also are strong lows because they pushed price all the way to break a verified high. That's what qualifies it to be a what, a strong low. That's it. Now for a downtrend, it's actually the opposite. So let's look at a downtrend idea. So now this is a downtrend, verified lows, strong highs, the inverse. So it means, of course, the lows are the most important in a downtrend. All of these lows need to be verified for you to trust that that particular time frame you're looking at, that's the structure. Because somebody could call you, I want to see your daily structure. I want to see your 4-hour structure. It means for every time frame, you need to draw structure. For every single time frame, you need to draw its structure. That's why you need to know this. So now if you're on the daily time frame, for instance, all of these lows need to be verified for you to call that the daily bearish structure. And what time frame verifies the daily time frame? Well, it's the 4 hours. So I need to see this high, low, lower high, and lower low formation that flip bullish. It should happen around here, and it should happen on the 4 hours, because this time frame we are looking at, you're using as example as daily. Okay, so if this is a 4-hour time frame, this whole thing confirmation should happen on the 15th. If this is the weekly time frame, all this confirmation should happen on what, the daily time frame. If this is the monthly internal structure, all of these verification should happen what, on the weekly time frame. That's it. Very simple. What about the highs? They are called strong highs. Whatever highs push price to break an existing verified low, that becomes a strong high. Okay, now I'll give you a very simple instance. So I'll give you a simple instance. Now imagine price breaking down this way. Now the truth is that not every high and low is meant to be taken seriously, because for instance, if price flipped above a certain high, if all these lows are verified lows in that particular time frame, and then price takes out this high, which is going to be a strong high, we have flipped bullish. But if that low, for instance, was not a verified low, it means this is not going to be a strong high. And if something like this happens, we won't consider this a change of character, because we are taking between this last strong high to this current low, we're taking it as one swing, just one swing. So when we see price pull up like this, we are not scared that price has changed, because we know that this is just a liquidity sweep, because that's not a strong high, and then price will continue lower after. That's the use of this verification we do, just in case you're still wondering. So that's it. So every of these lows needs to be verified, and if this is the daily time frame, then all this verification needs to happen on the 4 hours. And these highs don't need verification. All they need is that if a high successfully push price to take out a verified low, then it's a strong high. That's it. If it can take out a verified low, if you can push price to take out a verified low, then it's a strong high. Let's go to the chart and see this. So currently we are looking at GBP USD 4-hour structure, and what you see, it's bearish. And can you see that this low that we're gonna mark as a bearish low on 4 hours is actually gonna be wrong if it's not verified? So if I mark it finish, I would have to go on the 15 minutes to verify, because the 15 minutes is the younger or the inferior time frame to the 4-hour, just like how the 4-hour is an inferior time frame to the daily, and the daily is an inferior time frame to the weekly. Okay, so me marking all these, I'm gonna mark these, all these lows, because we are bearish. Of course, we are going lower and lower and lower and lower, and we just care about lows in a downtrend, of course. So now it's time for us to go and verify. So let's go and see if each of these costs a chalk on 15. All right, so this is one of the lows as green. Did it cause a chalk? Now, do you see this? That's a chalk right there. I'm gonna use ox blood to mark my chalks. Okay, that's a chalk right there. This is a 15 minutes time frame. We did low, we did high, we did low, we did high, and all of the way we did low. Now, price going all the way up to take out the high that led to this low is a chalk, and that's why here is green, qualified to green. That's it. Did you see the chalk? Yeah. So let's see this one. This is another one. This is a low that we marked on the 4 hours. But now let's confirm. We had low, we had high, low, high, low, high. And then we broke that. And then we broke that. As you can see, that's a chalk right there on the 15. So that's why this is valid green. Did you see that? That's what? A bearish time frame, as you can see, that flipped bullish. You see? That's a bearish structure rather than flip bullish. That's as actually what you saw on 15 minutes here on GU. So let's verify this one too. Did you see? Did you see we had low, we had high, we had low, and then we took out this high, and that's also a change of character. What I used to always draw, this, and this. That's it. This leg is this leg is this leg, this is this, and then this coming down is this coming down, and then this going up right here is the final one we have here above that. That's a chalk. Clear, concise. So you have seen how to identify these lows in a downtrend. Maybe we should look for an uptrend example to explain this further. All right, so we have a clean uptrend right here. As you can see, all of these areas is a clean uptrend. And what time frame is this? Is a daily. So it means if we are going to call this a daily structure, we need to make sure there is what? There is a confirmation or a verification that goes on the 4 hours, because the 4 hours is direct what's inferior to the daily. That's it. So all of this is I like marking my daily structures with red. So let's go on the 4 hours to confirm whether any of them is verified and valid to be called a verified high. And you see all these lows, they are all valid because they took out these highs. But I want to see if those highs are verified first. So here we go. This is the first high. Can you see that there is a what 4 hour chalk right here? Okay. Did you see there is a 4 hour chalk right here? And that's the high right there. This was a 4 hours going bullish, and then we did this and then we broke. That's why it's there that way. What about this? Can you see that there's what a 4 hour chalk here? Also a bullish trend that flipped bearish. Okay, I taught you. If you can take the video back, you get what I'm saying. This is it. Do you see that? Exactly. Very, very, very key. And then did you see the same thing here too? Yes, that's a chalk. Did you see the same thing here? Yes. Sometimes the chalk does not happen very close to the high. Sometimes it happens far, but all you want to put your eyes down is, okay, this one happened earlier. So you want to put your eyes down where that trend changed, where that chalk happened. That's what you want to pay attention to. So did you see all of these highs are verified? All of these highs are verified for that daily time frame. For the daily time frame, they are verified to be called daily highs. So let's move on to the next segment of this video. So what's dealing range? Okay, so dealing range is very simple. As price is progressing, doing low, high, higher low, higher high, higher low, higher high, all of these ranges are called dealing range. Between this low and this high, all what went in here is called a dealing range. Before price broke this high, when price broke this high, we now have a new range between this low and this high. That's a new range. I call it range B. And then when price broke that high, we now have, let's use this. When price broke this, we now have this and this as our dealing range, range B. Then price broke this high, then we now have this and this as what? Our range C. So this is a dealing range, this is a dealing range, this is a dealing range. Now all of these are old dealing ranges that have passed because price has broken. This is going to be called a recent dealing range. It's recent because we are still trapped in between that high and this low. But if you take out this, you become bearish. If you take out that, you continue bullish. That's exactly how it is. Okay, so let's go forward since you understand what a daily range is. Okay, so in most cases, okay, when we are talking about a daily range, what is the benefit? How is it used? So daily range, we have verified high. That's the label. That's like the structure of a daily range. Now in a bullish structure, a daily range is gonna have a low and a high, just like this. I'm trying to highlight what's very recent. And another characteristic that the highs are always verified. So a daily range is literally between a low and a high that is verified for that particular time frame. So if you ask, find the current daily range in the daily time frame for Euro USD, you want to mark out EU first and then see the most recent what daily range. That's it. So the same thing for a bearish structure is down, the high is up, the low is down. The verified low shows that this is a dealing range of that particular time frame. Okay, now this is a bearish structure, very easy to understand. Now, what's the importance of dealing range is because of the POIs. So bullish POIs are taken seriously only in a bullish trend, and bearish POIs are only taken seriously in a bearish trend. So I'm going to explain further. So why is dealing range such a big deal? So now in between here and here, I'm conscious that we are in a dealing range, right? Now remember, here has to be what? Verified. Okay, it has to be verified for me to imagine. This is my 4-hour time frame. This dealing range is valid because I have a strong low and a verified high. Now, why is daily range such a big deal? It's because from that daily range, that's where you choose the POI you want to work with. Is it FVG? Is it order block? Is it liquidity? From this and this, that's what you want to work with. You don't want to work with old POIs, because some people are trying to, when the market has shifted bullish, their old bearish POIs at the side, they're either scared of them or trying to trade them, and you most likely lose. So that's exactly why you are told to understand daily range and trade with POIs in the daily range only. That's how you do it. If you're bullish, you want to trade bullish POIs you find around here. And then if let's say the market price is going up, sorry, the market price is going up and all of a sudden it flip bearish. All of a sudden it flip bearish. All this bullish trend will not work. All these bullish POIs will not work. Do you know what will work? Because we are now in a bearish trend, only bearish structure POIs work, whereby price can go into them and continue lower, or go into this one and continue lower. Why? Because this is the new daily range that has been formed because we have flipped bearish. That's the most important, clear, concise range. And in that range, here is a verified low, okay? Because it's a downtrend, and here is a strong high. Of course, because that's the high that led to this low. Okay, that's very, very clear. So that's why I said bullish POIs are for bullish trends and bearish POIs are for bearish trends. So based on the last example I showed you guys with GBP USD, if I say I want to go back there the way I marked it and show you example, now take a look at it. This is a daily range. This is a daily range. This is a daily range, and this is a daily range. Do you see that? All right, so we have A, B, C. These are daily ranges, and let's take a look at how the POIs worked. Okay, so let's take a pay attention to how the POI works. So while we're in daily range A, did you see that this order block was what pushed price up? And you can only trade from that when there's a verified high and there's a strong low. It's an uptrend. Okay, what about daily range B? What pushed it up? Fair value gap. Did you see that? Fair value gap. What about daily range C? Well, the market had intent to change structure, so then it changed structure, and when it changed structure, it's changed to bearish, and now we started having newer dealing range. As you can see, it started breaking more and more structures, and you can see the market only respecting bearish POIs. You see that? Bearish POIs consistently. Okay, so that shows you when you're in a bull market, you focus on bullish POIs. In a bear market, you focus on bearish POIs. That's it. That's why dealing range is, you have to be very, very cautious about what you're doing. So this is our time frame hierarchy. The time frames we have are arranged in this hierarchy. Monthly that we use are arranged in this hierarchy: monthly, weekly, daily, 4 hour, 15 minutes. Now the monthly is divided into two hierarchies. Okay, the monthly external and the monthly internal. Okay, so if you want to call the hierarchy again, it's going to be monthly external, monthly internal, weekly, daily, 4 hours, and 15 minutes. So now I'll move forward to explain how it is. So right now, as you can see this diagram, these are the time frames: monthly, weekly, daily, 4 hours, 15. Now I told you that in this mapping structure something, you're going to mark every time frame separately. Every time frame has its own structure, and that's why you're learning verify highs and strong lows and all that. Okay, so now that every time frame have their own structure, imagine you're drawing structure for all the time frame. There'll be black lines everywhere and you'll be confused. So I devised a way the colors can be different so that you can be able to read price and mark the structure well with different colors, and you know that this color stands for that time frame, so you will not get confused. So in the monthly, we have internal and external. The external color is always with purple, that's it, and the internal color is always with yellow. Then for weekly, black. The lines you're going to use to mark the structure in weekly, black. The lines you're going to use to mark the structure in daily is red. 4 hours is green. 15 minutes is 15 minutes is violet. Then liquidity pools is blue. I told you guys about how to spot liquidity pools. So in a scenario where market is bullish, this is verified high, verified high. This is not verified, and this is verified high. This is a strong low. This is a strong low because it took out verified highs. This is not a strong low, and this is not a verified high. Therefore, this can be used as a sell side liquidity, SSL. And instead of price coming into an OB and buying, price can run this and buy. And when price does that, and when price runs this and buy, nobody's going to take it as a break of structure at all. But if price all the way from here comes and run this strong low, we are flipped bearish. But if it's this one, no, it's just liquidity, we can go higher. There's another reason why you're learning verified high strong lows. So that's exactly how it is. So liquidity is blue. Those unverified highs and lows in that particular time frame are liquidity pools, right? They can be used as liquidity pools. Their color assigned to them is blue. Now we are going to move towards marking multi-time frame structures. For you to be able to map structure right, you have to mark the monthly, weekly, daily, 4 hours, 4 set of time frames. You have to mark all of them the way they are related to each other, and that's what we're going to learn next. And we're going to work with GU, work with EU, work with USDCAD, and every one of these pairs, okay? So the steps are laid down. Pay attention and let's follow the steps to mark our structures. So we are on the monthly time frame, as you can see. So what is the first step? The first step is looking at this big structure and marking the most obvious structure. So if you check, you see that we moved this way, then we did this, then we did this, and then we did this, and then we did this, and then we are here currently. So when you have something like this, you want to put lines at the joints, okay, reversal points. When I mean the joints, I mean areas like these, areas like these, areas like this, areas like this, areas like this, those are the joints, right? So you want to make sure you have lines right there. So we have one here, which is we'll make it purple because you're marking our external structure with purple. Then we have this one, okay, and then we have this one, okay. Okay, that's what we have. And then we even have this one, and then we have this one, Okay, so you can see clearly that we have our external structure all mapped. Okay, so what we're gonna do next, so take a good look at it. So we had this high, then we had this low. Now when we pull back, we got this, and then we took out this high. Did you see that? Right, so you see this is a must. Okay, the fact that we took out this high is a must to market like this. So now we have a new high, we pulled back, and then this low took out this old high, and that's why it's a purple. So all of these are external structures. Now let's look for the internal structures in monthly. That's the next step, looking for the internal structures in monthly. So to be able to do that, you need to like focus on the most recent dealing range. Okay, the most recent dealing range, which is between this line and this line, at the most recent dealing range, because the dealing range must what be made up of purple, not like this. Between this and this, the dealing range is not complete because we don't have a new purple high here. Okay, so but the old dealing range here is between this one and this one. It has purple low, purple high. So that's the external dealing range. So we have to, when we have been able to find out, now we want to find out a mitigated POI inside of it, that dealing range, a POI that has been mitigated. So take a look at this area. Where can we see a mitigated POI? So we have a rejection block lying right here. So let me try to reduce the opacity of this. Okay. Okay, so what are rejection blocks? Okay, some of us, for some of you that do not know, rejection blocks are just wicks in the market. Okay, wicks, the areas where you would find other blocks. Like now, you see this wick we have that is standing all isolated. It's a bullish rejection block. As you can see, how price traded into it, and then price moved higher. Okay, you don't need BOS to validate them. You don't need them to have BOS to validate them. If they have a BOS, okay, it's fine. If they don't have a BOS, it's also fine. We have bearish rejection blocks too, but this is a bullish one. Now take note, you would see many areas you have weak standing, but not all are rejection blocks. Example, you can't call this a rejection block because it has a candle in front of it. You can't call this a rejection block, it has a candle in front of it. You can't call this because it had a candle in front of it, same as this. But you can call this a rejection block, but it's standing on its own. We don't have candles or wicks in front of it. The same way this one I marked is standing on its own, it has nothing in front of it. So don't just choose any wick you see as rejection block. Whenever it's standing alone, that's rejection block. Same thing goes for bearish rejection blocks. I can't call this a bearish rejection blocks. We have a candlestick wick in front of it. Okay, it did not touch it. Okay, can you guys see? Can you guys see that it wasn't touched? Okay, you see, it wasn't touched. So it's a bearish rejection block right there. It wasn't touched. So about this one, you see price touched the front of it, so we don't regard that as a rejection block. So this one right here, can we do that? Yes, it's small, but here there is nothing in front of it. You can regard it as a bearish rejection block. So I think that's enough for rejection block for now. So this one is a typical rejection block, and if you draw it completely, you have to draw it from the beginning of the week to the end of the week. Okay, so one thing you need to actually know about is that whenever price gets into a POI, structures change. Okay, like new structures start to develop. The first time it happened was here. We started having what? New set of internal structures. Okay, the price returned back to it again, new set of internal structures is going to start. Okay, what I mean is, if we have price doing this in the monthly external, okay, if price gets into a POI in the monthly external, just because the direct inferior time frame to the monthly external is literally a monthly internal, so that's the direct inferior. So that's why we need to what, look for what, new internal structures from here, not weekly structures. Okay, The weekly structure is an inferior to monthly internal, while monthly internal is an inferior to monthly external. So get it right. So as you can see, if price gets inside here, any new structure that starts to form, we call it what? Internal structures. Okay. Just like if these big swings, if this big structure here is a weekly and it gets into a POI, every structure that emanates from it is a new structure for the daily. Okay. Hope that's clear. So we get back to what we're doing. So the first time you get in, also I have to also state the fact that if price enters the POI once and then start making the internal structures and then goes back into that POI, new structures will start forming also. We don't even need old structures again. So if this is the POI in question, price gets into its new bearish structure and then price are going back right there again. You guys noticed that on a normal day, before we can consider something as change of character, as flipped bearish, it needs to take out this low. But the fact that we are back in, every new low that form is going to start a new bearish trend without considering price to break this to be called a change of character. That's actually the idea here. So we go back to what we're marking. We entered here first. It's old structure, so I don't care marking anything. We come back into it. It's literally also a new tapping. So we're going to have what? New structures, and that's going to be what? Internal structures, right? So we have this. Okay, we have this. So we have, you can mark, this looks very minor, but then it's okay if you mark them. Okay, we have this. Okay, then when we pull back this deep, this low took out this high. I ignored every other thing because it's when it's ranging, the lowest low among everything in the range is exactly what was able to take out this high. So I'm going to make all of that deep yellow. Our monthly internals are made up with yellow. So right, so this is how your USD card ought to look like. Okay, so we're just gonna save that, right? Just gonna save that, right? So yep, now we're gonna move to weekly structure. It's time for weekly structure. Now I've been able to mark that, right? So let's move to weekly structure. Okay, so in the weekly structure we are focused on this high and this low. Do you get that? Clear. So if you go back to the monthly chart, you would notice something. Okay, what's the most recent dealing range of the monthly internal? Remember, before we try to mark external here, before we try to do that, before we try to mark the internal structure, we were able to figure out the dealing range, the most recent dealing range of the what? External. Then the next step, we had to find a mitigated POI. We are repeating the same process. So we have to identify the most recent dealing range of the monthly internal, which I would say is between this low that took out this yellow high, this low and this high. Okay, between them, not this and this, because we don't have a new yellow high yet. Okay, if you want to mark this yellow, you find out that it's not going to be qualified because it did not lead to weekly chalk, so you can't do that. So it's between this and this, and then you have to find the POI that got mitigated. Well, there's an OB here, get last small candle before the move up, that price mitigated. So that's what you need to confirm before going to the weekly chart. So we now in the weekly chart, and what you need to get right now is whenever price gets into that that monthly internal OB, we're going to have what? We're going to have new structures forming. So here we have that low. Well, we mark these things black for weekly. So we got in right there, and we made our first high out of there, which was this, and then we took out that high again. Sorry, we took out that low again, and then we pushed up. We made this, so we have to continue with the trend. We made this, we made this. Now at this point, what you need to get right now is low, high, low. So when price all the way takes out this high, that's when we flip bullish. Between this high and this low, that's weekly dealing range. As long as nothing escaped here and here all through all this while, you're not supposed to mark anything inside here until when price escapes. And when the price escapes, we have our new high here, and then we have price pulled back this way. There was a POI right here that price attacked, but then we'll talk about that later, right? So we made this high, we traced up to this level, then from here we took out this, and ever since, have we made a weekly high? No, ever since we have not made a weekly high after taking out this. After taking out this one, we've not made a weekly high. Although I can still see things like this, and in order not to confuse you watching, I will just try to mark them, but then we'll verify it and see if it's worth it. Okay, so let's see this high and these smaller highs. Let's take a good look at them if they are qualified. Okay, let's take a look at them if they are qualified. Remember this all of these ones are qualified. Okay, but these ones are what looks, kind of skeptical. So if I go to my daily, let's see if we can verify them. Yep. Okay, so if I'm trying to verify this on the daily, you see it's not qualified, is it? It's not. It did not lead to a daily change of character. Did it? It didn't. So this cannot be black. Demote that shit to red. What about this? Is it qualified? Okay. Is this qualified to be black? Nope. We demote that to red because it did not cause any change of character. Okay. And what about this? Yeah, of course, there is some kind of daily chalk around here. So here is qualified to be black. But then we'll still figure out when we mark the daily structure if all of these are truly daily chalks. Why am I saying that? Is because some of these high that we are calling daily, we're not sure. But when we go to the 4 hours, we'll confirm them. But then let's move on. We are done with market, the weekly, and all those other confusing structures that we're not sure about. We have been able to verify them on the daily, all these red ones, right? Although we'll come back for this, there's some bit of choppiness right there. So you can see this structure is how your weekly should look like. Okay, so let's move to daily officially. Let's move to daily now and carefully mark what we see on the daily. Now, for you to effectively mark what you see on the daily, you need to know your weekly dealing range, the most recent weekly dealing range. You want to capitalize on that so that you can get this right. So where's the most recent dealing range? I'm not sure about this high. Okay, now in reality, I'm sure this is not a weekly high. Okay, it's not. But because I don't want to assume things in this video, because you'll be asking and start asking, how did he know? I want to be able to prove everything to you. But in reality, I trade USDCAD and I know that's not a weekly high. And one thing you need to get here straight is that whenever you're marking structures in any time frame and you see a high that is not clear, like does not look big or very obvious, like this guy, they don't look obvious. So when you see things like that, don't just go mark them black or the color of the time frame. Don't do that. What you have to do, go and find out, go and verify it properly. And when you're verifying, you need to verify very, very properly to know what those highs are. So now that I'm not sure about this ones, I'm going to ignore. But the dealing range that is clear, that has a black low and a black high, is this and this. This one has a black low but no black high yet that we can trust. So we have this and this. And then what's the next step? I want to mark POI in that, right? So what POI do we think is at play here? Well, that's a sell side liquidity, right? So if you notice, you find out something. You find out that price ran what? A sell side liquidity here as a POI. It happened once, it pulled back, it happened a second time here, and then move up. Okay, this is not a change of character. The only way the weekly can change to bearish is if we take out this low that led to this high. Anything other than that
it's still bullish, and that's just a liquidity grab to go higher. Okay, so that's a pure idea sell side liquidity grab. And that's why I taught you that sell side liquidity, buy side liquidity. And if you're confused, you go back to those videos, right? So now we are moving to the daily. So now what should we do in the daily? From that point you had a liquidity grab, you want to start looking for smaller structures in the daily. Okay, from that point it happened. So if I was going to start marking stuff like that, so I'll choose this. Now this is exactly where it happened. Now before that liquidity grab happened, you can see that where we have this black high, there's a daily chalk right there. So I'm trying to do this right. There's a daily chalk right there, as you can see. So if you follow up that trend, you find out that here is supposed to be a daily low. If you follow up these, okay, it's supposed to be a daily low. But one thing you need to understand is that immediately, okay, immediately a liquidity pool has been, or a POI has been attacked, new structures start forming. So the new structures that start forming, we want to start marking from here as red. We want to mark from here as red. We want to also mark from here. So if you check closely, you see that there was some kind of please don't pay attention to this. This is now abandoned because we have now started having new structure after the sweep. All of this old one abandoned, new structure, high. You get. So we even had the chalk earlier, which is something like this, but we'll verify everything later on. Okay, this was when everything, verify it later on. But then we gotta continue. So went lower and did a better grab. Okay, went lower, did a better grab, and all the way from that point we have this one. Okay, we have that one there, we have this one there. Okay, you guys are seeing this, right? So now this low took out this high, that's cool. Now we had this one, we had this one. Now we can see a high clearly, which is this. That high, now currently, me talking to you, I know that this is not a daily high. It didn't lead to a chalk, but this is because I've been trading USDCAD, I know. But what happened is I would prove that to you, but for now, let it be remain red, so that it's not be like I'm doing some bit of magic. It's not magic. I'm just trying to. I'm familiar with the pairs, right? So we have that high. We pull back to make this low because this low took out that high. That's what happened, and then it came back down again to cause a chalk. So listen, it came back down again to cause the chalk. Is this high that caused the chalk, not this one? This candle came later. So it means this was created, this was created. If there was anything that was going to be black, it's going to be this. But you see, this small high is not visible on the weekly. It's not. If you go to the weekly, this very small thing here is not visible. So what happened? Just leave it as red. So that high let's this, you get, before we got this. So if we got this last, this cannot be black, except after this week was created, we had another daily chalk here. Okay, this cannot be black. So what I'll do, I'll just take it off. When we go drop down to the 4 hours, or let's leave it as red for now. We'll go to the 4 hours, we'll be able to analyze this. We'll be able to analyze these highs and verify them. But for now, let's just leave it. Okay, let's do what is clear. Because me personally, I know this is not any of this high, but I want to prove it to you. Okay, now from this low we took at this high, we have this, nothing else up. So we're gonna stop there. Now let's go and verify many of these structures on the 4 hours if they are qualified. Okay, so now we are at the 4 hour time frame. So you see all these other highs, like any high and low that you doubt, please check them. The ones you don't doubt, you can still check them, but the one that you doubt is very important to check them. Okay, so can you see that this particular high that we called red is supposed to be red? Do you see that? Of course, we had some 4 hour chalk here. Now the only thing that can demote this thing from being red is if when we are marking our 4 hour chalk, we realize, okay, that this high was not 4 hour high. If this high was not 4 hour high, then this low would not be 4 hour low.
It will not be a what? A strong low. And if that is not green, if this is not green, this is not green, then taking out a green, so if taking out that thing that is not green cannot lead to a red high, which is a daily high. Okay, that's the only reason why this can change. But for now, it looks like a chalk, and then we leave it there. And the fact that it's old structure, we can leave it like that, no stress. Okay, it's even old structure, even if it's correct or not, we can leave it like that because we don't need this data again. This 2024 September, we don't need it, but we'll just leave it like that, just so I don't confuse anybody, right? Now we have this high. Now, did this lead to a chalk? Did this high lead to a chalk? No, it didn't. We demote that to what? Green. This high did not. It did not lead to a chalk. And this is red. This did not lead to a chalk. This cannot be red. As long as this is not red, this cannot be red. Of course, this can be red. Okay. This led to what? The breaking of a red. So yes, it can be red. But this can't. This will be green, demoted. Okay, because this is just a mere green. It did not lead to. So this is going to be green. Now we have the market doing a chalk here. So here can be red, literally. Okay, that can be red. And there you have this one. Yep. So this has been settled. This led to 4-hour chalk. That's why it's red. This was red because it took out this high. So now we can move on. And this is supposed to be red actually, this line, but it's not red because it took out an old big black high. This is going to be black. So marking everything up, let's verify the rest of them. So we have this high. Okay. Now, if you check, this did not lead to any chalk. We can see visible. So this gets demoted to green. And therefore, this will also what? Turn to green. Very simple and easy. Did this lead to chalk? Yes, it led to several chalks on the 4-hour. So it has to be red. This is supposed to be red. What about this? Yes, it led to a 4-hour chalk right here. You can see it deserves to be red. And this low that took out the highs deserves to be red too. This did not lead to any chalk. So we have to demote it to green. Okay, you have to demote it to green. And then when we took out that high, although we did not mark anything here, so we're not probing anything right there. What about this one? This one, this did not lead to any chalk at that moment. Okay, so let's take a very good look at that. Did it lead to chalk? Yes, I think it did, because this was a 4-hour low, small 4-hour high, then we did this, and then we range, and then we came all the way back down to take out this low. That's a chalk right there. So that deserves to be red, and this deserves to be red. And then what about this? Well, it's supposed to be black, but it's not visible at all on the weekly, so it remains as red even after taking out this red. Okay, which is a chalk, a red chalk. So it remains as what? As red instead of black, because it's not visible on the weekly. Then what about this? After it did this low took out this high, it has to be red. And then now we have a new high. Now this particular high did not cause any chalk on the 4-hour. Take a look at that. It can be red. We have to demote it to green. Okay, it can be red. It did not it did not cause any chalk after that. So it has to be red. And then what else again? All these were not marked before, so let's not probe what was not marked on the daily initially. So now we have our daily fixed. Let's go back and take a look at it. So we have our daily fixed, very fixed. Can you see that? Can you see all of that? Can you see all of that? So here we go. So now we are done with the daily time frame. Now we need to proceed towards the 4-hour time frame to market. So I'm going to leave this like this. Going to leave it like this and save it. So now we have to proceed to the 4-hour time frame. But now you know what we do? We have to find the most recent dealing range. So where is the most recent dealing range? Well, between this high and this low. This is a red high, this is a red low. Okay, between this and this, everything right from there, we want to look for what? Change of character. Do we have a mitigated POI between this and this? No, everything looks a bit choppy, no mitigated POI, so that's fine. We'll go to the 4 hours, we'll see what to mark. We'll see small structures on the 4 hours that we can mark as highs and lows in that dealing
range, that red dealing range. Okay, so now this particular high I called green. For now, let's leave it as green. Let's believe now this low that took it out is going to remain green. Okay, that low that took it out remains green, and then this high, well, we call that green because it's a high that's visible on the 4 hour. Then what about that? When we got that, we pulled back a bit, pulled back and went higher a bit, but did not cross here. So we cannot mark these things. We are in between this low and this high. That's the dealing range we are in. So we cannot mark anything except the particular low that led to the break of the high. This low did all the gaps and everything, but then boosted to take out this high. In some brokers, you have a big long candle here, but in Wanda, you don't have it empty, you have a gap. And then we now have this 4 hour high. So now we have been able to mark our 4 hour structure. It's time to verify all these things we have marked. Okay, so we have um this low, this high. Now that high they call the green, did it lead to a 15-minute structure? You can see it didn't. Okay, if you follow the 15-minute structure, you have low, high, low, high, low, then till we took out this. So this low led to this high. Was it taken out at any point? Look to the left, to the right, sorry. Was it? No, it wasn't. So therefore, this is not qualified to be green. So we demote it, and when I'm demoting, I demote it to blue. Okay, because I use blue to mark random liquidity points, buy side and sell side, okay, that are not any structural highs. So I'm going to demote it to that, okay. And then this is green because it took out this at the end of the day after the whole range. It's not qualified anymore because what it took out was not green, it was a random high, so that becomes a random low to blue. Do you see that, right? So what about this high? Well, it's qualified. As you can see, there is a chop here, low, high, price played a lot, and then we had the chalk right there, 15 minutes chalk right there. So that's why here is green, and whatever low finally pushes price to take out that green remains green. That's correct. Then what about this high? Did it lead to chalk? Yes, it did. There is a chalk right there. Okay, so yes, it led to a chalk, and that's why here is green. That's correct. So we are done with marking, verifying the 4 hour structures. So we're going to take a good look at it now on the 4 hour time frame and see the work we have done. So we have our work right here, plain and concise. So this is how our 4 hour looks like. We don't even have much structures. We just have this high, low, and high. Every other thing you see in the past, please don't pay attention to them. That's why the rule says the most recent daily dealing range. You don't need to mark all of these. These are past. Sometimes you see me go back to verify. It's just because I want to teach you how I verify these things. You don't need any of this again. It's over. You need what's recent. Okay. The reason why I have all this marked up because these are like the recent weekly dealing range. We have to mark everything up. But based on the 4 hours, you just focus on what's here, what's recent. Okay. So I save this too. So this is the end of USD CAD. You can ask your questions on that. All right, so this is gold. So to mark gold, to mark your market structure in gold, so the first thing you have to go to is a monthly time frame. We're going to be able to mark our monthly external structure. Okay, so this is you marking the easiest structure you can see. Okay, what is clear? We have price moving here. We have this. We have this. Okay, this is the clearest thing you can see on what the gold chart, right? So all I want to do is I want to mark here, right here. I want to mark here purple. Now remember, it's all the joints we're focused on, low, high, and then we have these joints here. Okay, did you see that, right? So we have been able to mark our external structures on gold. All right, so what's next? We have to find the most recent dealing range and mark a mitigated POI right there. So what recent daily range is that high and this low? A purple high and a purple low is our recent daily range. It's not between this and this. Now the reason is because this is not supposed to be a purple high because it didn't lead to internal market structure chalk. So we need something like this
to happen here. Sorry, we need something like this to happen here for here to be purple also. If that didn't happen, then that's not going to be purple. That's going to what? Be yellow. But we'll get there. So we have identified our what? Recent low and high. Right, so now we're going to mark a mitigated POI. So let's scan for something. What do you think price is reacting to? Well, so we have a rejection block right there. So let's zoom in a bit. Do you see the rejection block right there? So that's what we have price reacting to currently. So from there we can be able to start marking our internal structures, right? And we mark that with the color yellow. Okay, we mark that with color yellow, and then we have yellow here, then we have yellow here. Did you see that, right? And then we have here to be yellow also, right? And maybe here too. Now this particular low is exactly the low that took at the side, not this one. It's the deepest low that took at the high. And there we go. That's all we need, right? I'm gonna save this. So now we're going to go to the weekly chart. It's time to mark the weekly chart. But before we mark the weekly chart, you have to understand that when it comes to marking the weekly chart, we have to mark that weekly chart between this high and this low, making sure that we are able to identify a mitigated POI in that area, okay, between this high and this low on the weekly chart. So we'll go to the weekly chart. We'll be able to see it. Now, on the weekly chart, here we are. This is the most recent dealing range of the monthly internal structure of this low and this high. So, take a good look at it. Now, when price enters a POI, it generates new structures on a smaller time frame. This is a monthly point of interest. So definitely whenever price gets in, we generate new structures on the weekly. Whenever price gets in, the same thing. So that's exactly what is going on here. So we have, how do we mark this? So we mark our weekly with black. Then we mark this. Then we mark this black. And then we mark this black. And then we mark this black. Okay, now I know you see these all these smaller structures. Well, they are not weekly structures. Okay, they are daily structures, and if you mistakenly mark them when you go to the daily to verify them, you find out that they are not qualified. So I don't want to waste that time here. We use as marking up. You can go and check it out. So we have low high, low high, low high. Now we got this one, this low. That's the break of this high. Now, what about this? Well, this based on I trade gold. I know this is not a weekly high, it's not qualified, but I'll just leave it there because we'll verify all of that later, right? So all of these, I'm going to make them black. I'm going to make even this one black. I'm going to make this low that took out a high black, right? That's what I'm gonna do. So it's time to go and verify all this black. And you guys will be asking me, why didn't I try to verify all this yellow? Well, let's see those yellows now, whether they are qualified or not. This yellow, you can see it led to a chalk. It led to a chalk at a certain time, which is here. You see that? What is the pattern? So this is the pattern. The pattern is we have this, and then we have this. Of course, we had this and this. So this is a chalk, literally. No matter how long it took to happen, it's a chalk, and that one here is yellow. So beware of that. That's why that's yellow, and here doesn't fit to be yellow literally because it didn't lead to any chalk. So I'm going to demote that right there to black. Okay, I'm going to demote that to black, and therefore this yellow is not supposed to be here because this low led to the breaking of this black high. So this is supposed to be black. So literally the one that's supposed to be yellow is this one, right? Now why is that so? Because it led to the breaking of another yellow, this low. This yellow is qualified, verified high because it led to weekly chop. You can see that right there. So let's move on. Okay, it has to be small because it's not usable. So let's move on to verify the black structures. We have verified the yellow structures. Let's verify the black. We verify those kind of structures uh, on the daily. Okay, so now on the daily, let's take a look at things. Right. So on the daily, does this qualify to be called a weekly high? Not really. Take a look at it. It doesn't. Did it lead to a chalk? No, it didn't. So this will be demoted to red. Okay, right? That will be demoted to red. And whatever low that led to the break of it, which is this low, is gonna be red too. Now take a look at this. Did this lead to a chalk? Take a look at that. Did it lead to a chalk? No, it didn't. We have price doing straight up this, and then we have this pullback. So no chalks. So here is gonna be red, right? And if that's red, this low that took out this high is red. So is this high black or red? It's supposed to be red because if it's only when we take out this low, it's gonna be supposed to be black. But now it didn't, so it's gonna be demoted to red, right? It's gonna be demoted to red, and then we have more red lows highs, but then we are not interested yet. We just want to verify if these ones are okay. As you can see, we have a very clear chalk here. That's why here is black. And because this low led to the breaking of this, that's why here is black. So it means our weekly time frame is ready and clear. Take a look at that, right? Take a look at that. It's ready and clear and safe. Okay. Now let's talk about the daily time frame. Now to mark the daily time frame effectively, let's take a look at the weekly again. We need a clear weekly daily range. So where is our weekly daily range? It's not between this and this because this low is leading to a new high that has not been confirmed to be black yet. So our daily range is as far as that, right? Between this low and this high. So it means every of the structures here, we need to look at them. And then between that low and this high, we want a mitigated weekly POI. So we have something like this, which is a fair value gap mitigated right here. So any moment from here is always easy to get your new structures that are going to be forming on the daily after that, right? So when price plugged into that, we have our new daily high forming here, right here, and we pulled back, and then this low took out this high, and then from this one, and then what happened is that we still try to break above at some point, and then when we did, we created new high here, and that was it. This is what qualified to be daily high. When you verify it, you find out it's easy, it's very obvious already. So to make things clearer, these are daily structures here. These are daily structures here that led to this black high, okay, and this is also a daily structure. And this is actually the low that led to this strong high. Sorry, this verified high we have up here. So let's mark this properly. So that's it. And then every other high that we have here should be red. Maybe we'll verify them later, but then they should all be red. Now we have reds everywhere. Now we're going to go and verify if these reds are actually correct and what's it, okay? All right, so now we have the 4 hour and what's our recent daily structure, or we are here on the 4 hours to verify the daily high. So let's look at that first. So you can see this led to some chalks right here. You can see high led to some chalks right there. You can see high led to some 4 hour chalks right there. Correct, made sense. You can see this black high led to some daily chalks, and then this daily high here led to some 4 hour chalks here. So it's actually qualified. This is red. It led to 4 hour chalks here. Qualified. This is red. It led to 4 hour chalks here. Qualified. This is red, and it led to some 4 hour chalks here. Qualified. So most of them are qualified. And then this recent one we drew here led to 4 hour chalks qualified.
and what else? Okay, so they are all qualified. So what we're gonna do, let's go back to the and look at what we have just done, how clean it is. Did you see that right? So now it's time to go to the 4 hours and mark up the 4 hour structures. But then we know the rules, okay? We need to mark or see a verified daily range first, okay? So between this low and this high are kind of verified, although we broke it and then we continued, so we are only going to be looking at these levels, okay? And the POI mitigated around this whole area is this fair value gap. So from here we just have to see 4 hour structures that exist. So go to the 4 hours and check structures that formed from there, which is going to be easy to see because new structures are supposed to start from that average. Okay, so we're going to see as price plunged here, we have a new 4 hour high right here. We mark it with green. Okay, then we have a new one right there. So we had this one, we pulled back, create this low. This low made this one. Okay, and then this one led to this low we have here. That later led to a change of character, and then price went back up again. That was really cool. So we had this one, and then we had this one, and then we had this chalk right here, and then we continued bearish. Okay, most times old structures I don't really care about verifying them, I just want to care about recent ones. But you that is new learning it, you need to care about marking it actually because it's important. You can see why this red low is red because you see the chalk that happened on the daily, right? On the 4 hours, right? Correct. So we have that high and this low leading to that. Then we have this clear one and this low leading to that. And you know where we verified the 4 hour charts, right? 4 hour structures, we verified them on the 15 minutes. Then we have this, and then we have this one right here. So do you see? We have high, we have low, we have high, and then we still have low here, and then we have high, have low, and then there's a chalk, and then price created that as red. And as long as this low took out a red, that's supposed to be red too. And then we have these high and supposed to be green because we're on the 4 hour chart. And we have this as green, and then we have this as green, then we have this as green, and then we have this as green, then we have this low as green too. Currently, what about this? Well, let's make it green, we can verify that later. So now we have a lot of clear 4 hour structure. So let's see what we can verify. As you can see, the clearest we have is between this and this. I'm not sure of this because it's a new high for I just marked it, we'll verify later. But what am I sure about? Between this low and this high as a very clear dealing range. So now we have to mark what they call it, the liquidity sweep that push price higher because there's always a POI that has been attacked. Okay, this is a sweep that push price higher. From there, we want to see if the 15 minutes can give us some information about this high and the rest of them. So did this high lead to 15 minutes chop? Let's look carefully at that. Now we have something that looks like a high and then the low and then the high that can explain a structure. We do not trust here to be a 15 minutes high, first of all. So it means we have to go to the 1 minute to really check if this led to a 1 minute chop before we can trust this as a 15 minutes high. And then we can trust this as a low that took at the high. And then we can trust this whole chalk as a 15 minutes chalk that can lead to a 4 hour high. Okay, so let's look at the 1 minute. Okay, so I think this is it. We have that 15 minutes chalk we're talking about right here. We have it. I'll mark this with an ox bloodline. We have that 15 minutes chalk we're looking for here. So let's go back to the 15 minutes. You had that 1 minute chalk you're looking for right there. Let's go back to that. So it means that this high is qualified to be green because there is some bit of 15 minutes chalk right there.
So that looks really good. Now we have, you don't need to mark a 15-minute structure, you have to stop at 4 hours. So I marked that just to verify that high. So we are cool. So this is how your 4 hours should look like on gold. Very simple. So guys, we have been able to come to the end of this video. I know many people that would watch this level are trying their best to know how to draw structure. But this video, every explanation I did from the beginning to the end is exactly how I draw structure, and it's exactly how everybody that are under my mentorship are drawing the structure. It's the same way they all drew, and it's the same way the guys that have gotten their payout from my mentorship, the same strategy, the same structure reading, and it's not difficult. But the only thing is that the mentorship would help you to understand it better, because now the mentorship, you get assignments and you submit assignments to me and I'll correct you and I'll host live classes with you and teach you. You share your screen, I'll direct you. So that's more like an intensive care to understand this better. But this video is just a full guide that after watching this you can practice as much as you can, but you can't get my attention to help you get it from scratch. That's why there's a mentorship. And if you want to join the mentorship, send a DM Forex to the first link you see on the description. That's my Telegram DM. And for those of you that want to get trading insights, breakdown about how I catch my trades, breakdown about what I know about the markets, psychological tips, PDFs, and maybe even giveaways, right? Just go to the free channel, is in this description. Also, join the free channel and stay tuned to everything I have to give you that will improve your trading, guys. Peace.